Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking you through the Australian dollar versus the US dollar again, as price has come back into a little bit more of a deeper support now. So the last time we spoke about this market, we were looking to see if price would reject the zero spot 68.75 handle. The reason why we bought that level up in the first place was because it was a previous wick high from this high in here. So what we were looking at in particular was, if price is going to continue, would it continue within this area, and could it continue at that point? And what we were talking about looking for was looking for those reversal patterns in the market. So a reversal pattern to me is an inverse head and shoulders pattern, or it's a double bottom pattern, because they're signs of price rejecting lower prices and moving to the upside. Key reversal patterns. However, we didn't get that. So if I drop down into the 4-hour time frame and just zoom out, so this was when we last talked about Aussie US dollar in here, okay? And what we were looking for at that moment in time was, one, the double bottom pattern, or two, the inverse head and shoulders pattern, and we got neither. You could argue that when we saw this bullish candlestick in here, that could be the start of a double bottom pattern. However, a double bottom pattern completes when it takes out the neckline and moves to the upside, and we start to get higher highs again and higher lows. Okay, so we didn't get the completed pattern there, so that would have been an early entry on that one. That would have been a negative one, and if you were in long there, you would have hit your stop loss in here. However, we're now come back down into the deeper area, so I'm now again on the sort of lookouts to see if price is going to find support. Now we've got a little bit more confluence this time. If I go back up to that weekly time frame, we are still technically in an upward trend slightly. Okay, so you can see we're in the downward trend here. The market's making lower lows and lower highs. Now price rallies from the 0 spot 62 handle, goes sideways, forms this high. Price then breaks out, forms a higher high. Okay, and that is the beginning of a potential trend forming, because what we would expect to see next is a higher low if the trend is going to continue. Now we have come up into the 0 spot 71 resistance, key resistance, very strong resistance. So the reaction here may not be as strong. It may not come back. It may not form a higher high, but it may perform a short-term move to the upside before continuing a downward position if that trend is going to continue in that direction. So looking to see here if we just get a short-term momentum bounce, maybe even 200 to 300 pips here, maybe back into the 0 spot 71, because the 0 spot 71 could be key resistance for a continuation to the downside. Now if I look at the daily time frame as well, you can see that I've got a moving average on here as well. If I just highlight, that is the 200 daily moving average. The reason why I quite like the daily 200 moving average is because it can often act as support and resistance in the market. Okay, so you had some slight resistance in there, resistance here, around there, around here. So it's price coming back down. We've got horizontal support looking left at the 0 spot 67.90, and we've got this 200 moving average. So is that going to be a sign that we're going to see a move back to the upside? Okay, if it is, I'm going to look for very similar things again. I'm going to be looking for the inverse head and shoulders pattern or the double bottom. So what I need to see is price rally a little bit, come back down, retest these lows, okay, rally again, make a new high. If we make a new high, it could give us the opportunity to be buyers into an area of resistance, or buyers may want to try and get in on that move at that point to try and trade up to the next level of resistance. Alternatively, if price makes a lower low here but comes back within and rejects again, we've got the left shoulder, the head and the right shoulder, and then we can look for opportunities to the upside when price breaks through the neckline of that pattern. So that's what I'm going to be keeping my eye on. Obviously price has fallen through that level we talked about before. That happens, but technically we didn't get the pattern set up in the first place, so there was no reason to be entered into that market at that moment in time unless you took early entries. So I want to be looking for clear market patterns to form in order to then look for opportunities to the upside. If it doesn't happen, the reason why it might not happen is because fundamentally the dollar is strong at the moment. So the Federal Reserve may have to hike rates more aggressively or hike rates for longer. That could keep the Aussie US dollar price under a bit of pressure. And if we were to trade below 67.90, I think that would open the door for a move down to 0.6650. So we do have to be a little bit careful of that potentially happening as well. But these markets don't always move in a straight line. Even if a market is bearish, we can sometimes get some rallies out of them before they continue their moves to the downside. So nothing to worry about there. So hope you enjoyed the video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And I'll speak to you in the next video.